So hello, everybody. Thank you for joining us. Today's topic is going to be about the Halal program, which is a faith-based loan program for those in the Islamic community. Today, Crystal is going to educate all of us on what that looks like, when to use it, how to use it, and what to do. So we're going to try to keep this, as always, to hitting the highlights, making sure you understand what you're doing, whether you're in an originator or a real estate professional or a builder. We want you to know that, one, this program exists, who it's for, what are the benefits, and why they'd use it. So with all that to be said, Crystal Miles, she has been in the real estate industry for over a decade. She's been, we have been lucky enough to have her on our team for a little over, coming up on 2 years, year and a half, 2 years now. And she is just a freaking badass. She gets all kinds of problems solved. She's incredible. She's wonderful. She's great. Whatever. Miss Crystal, thank you for joining us today. First and foremost, it's before we go in, did I miss anything on the bio, or is there, and I would always be prepared, guys, to have a little conversation so you don't just run into it. Tell me something that happened good this week, or give me a business moment. So I just thought of this. We will come up with something beforehand give me a business moment. What's a sales moment? What win did you have? So Crystal, I want you to give me something that realtors and other loan officers can be inspired by or something like that. So let's, off the cuff, what's your win for this week?
I received a referral for a client that the mother-in-law, well, father-in-law's mother passed away, and he inherited the home and was trying to sell it to them. And because of the unique situation, they were told that they couldn't get financing and a couple of other things. And so I took a look at the file and spoke with them about it, and we were actually able to do a sale from the father-in-law to the daughter with a gift of equity to cover all of the down payment and closing costs, and we'll be closing that next week. And
Awesome.
they were told by several people that it's not something that they could get done, so I'm glad we
That's
could help
fantastic.
them.
That is fantastic. All right, Justin and Tamara, I'm going to ask you guys, do hide your cameras for the moment. So I will look into this with PJ because I want to be able to use this for marketing, and I'm going to try to hide my view here to where it's just whoever's talking. So speaker mode is on, hide non-video participants. There you go. So now it's just Crystal and me. So now we'll start the reel. So once you guys give that, we'll do, and again, it can be, hey, I just read this in a book, or I don't care, something in personal life, just sold my home, whatever it may be, we can figure that out. All right. So now this is what we're doing for real. Everyone, thank you for joining us today on the Learning About Loans. Today, Miss Crystal Miles, who is on our team. We're so blessed and lucky to have her as part of our teammates, and she is incredible. What I've noticed in Crystal in the last 2 years working with her is she figures things out probably better than most that I know. She's able to find the products that I didn't even know existed. So today she's going to be talking about a program that is it's a faith-based program for those of the Islamic community. It's a halal program, and I'm going to learn with you. She's going to educate us on what that is and how it's used. So Miss Crystal, first and foremost, thank you for joining us today, but fill me in. What is a halal program, and what to do? So give me a quick overview if you would, please.
Okay, so the Halal program is for, the faith-based community where they're technically not allowed to pay interest per their religion. And so the Halal program was created to help, you know, that community be able to purchase the home without violating the context of their faith. And so, it's a regular conventional loan, follows Fannie Mae guidelines. And essentially what we do is we create a trust and we close in the name of the trust. The trust then leases the home to the borrower that has an equity interest through the trust. They are the trustee. And therefore, the trust is actually paying the mortgage, paying the interest, where the borrower themselves is paying a lease agreement. And then once the home is sold, since they have an equity interest in the home, and get the sell, even though they're not the direct owner of the home because the trust owns the home. So it allows them to still have home ownership without breaking the rules, so to speak.
That's awesome. So in other words, their religion, which I'm not trying to be tongue in cheek here, but they don't believe in paying interest,
Yes,
which
that's correct.
I'm like, sign me up for that. Right? I don't want to pay interest either, but to avoid paying interest, they then essentially lease or rent the property from said
From the
trust.
trust. Yes.
Okay. Do what? Who sets up the trust? The mortgage company, the title company? Do they have to set it up in advance? Who sets up the trust?
So we do set it up as part of the mortgage process. We personally at CMG work with a company called Ajara, but the borrower can choose whatever company that they want. And then the trust, what the cost of the trust is part of the closing costs. And it is based usually on the loan amount, and it can range from, I think on the high side, about $3,500, and then less if it's a lower loan amount. But in Texas, we all know that it's probably going to be close to that 3,000 mark. But that is a discussion that I have with clients. I set the expectations of what those costs are based on the loan amount, and it is just part of the closing costs and paid at closing.
And for those listening, if you guys have questions, feel free to put them in the chat. One of my questions that I have is, so what I heard you say is the trust, the cost of, first of all, we set it up as a lender. So the lender sets up the trust for them. And that gets done before closing, so they can close at closing.
Yes, it's
Um,
closed in the trust.
and it goes in, the house goes in the trust. The cost for said trust was, you said, and it can range, guys. So it depends on when you watch this and where you are, what state. But the trust cost will range, but it's based off the loan amount.
Correct.
Is that what I heard? And
Yes.
then so on a high, is it like 1%, or is that the attorneys determine that? Like, how do you know how that's
No,
determined?
we have a set cost. I don't have it in front of me, but I do think on the high side it's about 3250.
Okay, so we'll look it up, and wherever it is, if you're watching this, we'll put a link to wherever we can find that resource. But in general, call it, let's just use round numbers. Let's call it 3 grand, give or take, to set up the trust. And that's not money that Crystal gets to put in her pocket. That's actually going to the attorneys, to the lender, to
Yeah.
set all that trust up.
It goes to Ajara, and then the
Cool.
borrower is the trustee of the trust. So they still have full control of the trust.
So as
The
the
trust is an
trustee,
entity.
for those that don't know, the trustee is the one that controls the trust. Is there, I assume they got to set up benefactors too, maybe, I guess. And that's kind of, the trustees will just set themselves up as the benefactors, or who, like if
Yes.
they, okay. So if something happens to the house, let's say it burns down, or, whatever, gets swallowed by an earthquake or something, or burns up in a fire, what, that is it just normal? Like at that point, because the trust owns it. So it's just the trust would get the insurance money and the trust then rebuilds the house. Is that how it works?
Yes, that's correct.
Cool. And this is for, so this halal program for people of the Islamic faith. Is that correct?
Yes.
I got to be honest. I'm dumb, and it's okay if you are too. I'm ignorant. I shouldn't say dumb, but I'm ignorant on this. I don't go no from an Islamic faith. That's the Muslim community. Is it all the Muslims community, or is there a sect or a smaller portion that this applies to?
It's more Orthodox Muslims, just kind of like you have Orthodox Catholics and then regular Catholics. It's for the stricter Muslim community that really,
Adheres to the not paying interest and wants to take these extra
yes,
steps to do it. Gotcha.
yes,
Okay, so for those that need and want this, the halal program is a great way to avoid the interest payment so that it's in line with their, with their religious beliefs. But obviously, it's a way to do home ownership to where they then lease this. So when they're paying these, and this part you don't know, this is consult your CPA, but maybe you do know. So if I'm paying a lease check every month for whatever it is, basically it's the mortgage payment. Am I right? Like the amount of the
that's
lease
correct.
is the mortgage payment. So if I'm paying that lease money every month, is it tax deductible? Probably
That
not, is
I
my
don't
guess.
know, and definitely refer to your tax person, but
Talk to a CPA. I'm guessing not, because it's a lease, right?
yeah.
So I'm going to guess it's not interest paid, so it can't be deducted on their taxes. So keep that in mind.
But what the rent does is it increases their equity position over time. And so that way, when the home is sold through their lease payments, they have a greater equity position to take those funds and use for whatever after closing, whether it's, to purchase a new home or, you know, what normal people do with their seller proceeds.
So in other words, is it every month that their equity increases, or is it like at a
Yes,
predetermined period every month?
yes.
So
It
every month
increases it with
a
every payment.
portion, the trust equity grows every month as they pay down this balance based on whatever. And I guess I shouldn't say grows, because it's based on just normal type mortgages, I assume. Like if the house appreciates and they're paying down a mortgage, then it's the same thing. It's just the only difference here, the biggest major difference, is it's happening inside of a trust versus in their personal name.
Correct.
Cool. Um, so when they sell it, they want to sell it. What do you know? Is there any extra steps, or is it kind of just normal, and like the contract for Joe Buyer coming along to buy this house down the road? I assume Joe Buyer buys it from
The trust.
ABC Trust.
Hmm.
Got it.
Yes. And since
Cool.
they are the trustee, they have full signing rights for, that particular scenario with selling the home.
I love that. I will say I did a little homework, and obviously we've done these before, so I'm not completely dumb on this thing. But again, I'm not in the weeds like you are. I saw something that we can do. I think you alluded to it in the beginning. You can do normal financing, air quotes normal, like Fannie Mae, Freddie Mac. I even saw VA and
It
FHA,
it's Fannie Mae guidelines is what
not
it
Freddie.
follows. Not
So
Freddie.
not
It
not Freddie.
follows
Okay.
Fannie guidelines.
Gotcha. And for those that
You
aren't in the
can do
mortgage
investment.
business, just to be clear, for those not in the mortgage business, it's pretty much 99% the same. There is 1% here and there where one might require an extra piece of documentation, but as a generic whole, Fannie and Freddie are the same for those that don't know. I did see that it does allow for we do now. It used to not be the case. So this can vary by lender, but I did see that we now allow FHA and VA to also do the same thing. So it's a normal, again, air quotes, normal FHA, normal VA. The biggest difference is just the closing documents and how it's handled at closing. Is there anything, Crystal, during the process, just so that a lender knows, speaking of lending community, is there anything different that we have to do as lenders during the process?
Just initiating the trust documents and set up with the company that you choose to go with. As mentioned, CMG uses Ajara Inc. And we have an established relationship with them. So once we start processing the loan, we send them the necessary information to start creating the trust documents. They do send the documents to the borrower that have to be wet signed and sent back. So we have to make sure to do that early enough in the process that we're not holding things up because they are happening simultaneously.
Gotcha. So if you're a consumer listening to this, somebody who wants to buy a home or use this product or program, the biggest thing is, and you should be working with our team, but if you're not, that's okay. But if you're not working with us, absolutely make sure this gets initiated in the front end because it's not an e-signature. I heard wet signature.
Yes,
So in other words, pen to paper, which means back and forth. And then unfortunately, nobody wants this house as quick as you and your lender. Third parties, and I'm sure this other company's great, but if there's third parties involved, get it started early so that you're not the holdup. So that's the big difference in the process. Other than that, it's the same normal type, whatever they need to get to qualify. You as a loan officer, as a mortgage loan officer, you do the same normal stuff outside of that one extra step to prepare it. And then it's the closing attorneys and all the back end folks that prepare the documents for the trust that gets signed at closing. Is that correct?
that's correct.
Love it. Love it. Love it. Love it. Um, I think I have a pretty good handle. So let me ask this question. Let's see if, from a cost standpoint, it sounds like it's about the same. What about rates? I assume rates are the same because it's the same, like we talked about, normal, air quote, normal programs, right? Normal rates for
Yes.
FHA, VA, conventional, whatever you're doing.
Really, the only difference is the trust creation. Other than that, it's a normal loan process and it even includes investment properties, which is something that we learned
Wow.
recently and surprised me because I did think it was for primary, but it is for investment properties too.
Hot dog. So investment property, just to be clear, if there's three types of properties in the mortgage world, there's owner occupied, one you live in, there's
Hmm.
investment, one you don't live in ever, and then the second homes, which is one where you might visit the lake, but you can still rent it out, but beach house, mountain houses. Is it for second homes as well? Do you know off the top of your head?
Um,
I would assume it is. If
I
it's
would
if
have to
it's
double
good,
check on that, but yeah, I mean, if we can do
we can do
non-QM
investments, we should be
even,
able to do anything.
we can even do DSCR on it, which is a non-QM product. So I would imagine second homes maybe, but I'll double check on that.
So here's what I'm going to say for those that are watching. If you investments are the highest level of risk. So if we can do investments, I'm 99% sure we can do second homes. And if we can't, and the difference would be just in rate and qualifying guidelines, just call it an investment property and you can still buy that mountain house with it. Crystal said something that's very interesting. DSCR, for those that don't know, think of it like a no doc, a no income loan, where you're basically treating an investment property and you're using the rents. If the rent is bigger than the mortgage payment, that's how you qualify for the home on that product. So there is a link somewhere around here to the DSCR program. And in fact, we will talk about DSCR next week. How about that? We'll make that our program for next week. Crystal, anything else that I'm forgetting? Is there anything else you want to mention or talk about?
No, no, that's basically the gist of it.
Love it. Well, you are very good at these. I know because you and I've done them together, and I always joke with people, you do the dirty work and I take all the credit. But the
For
reality is
sure.
people know who's doing the work. But again, if you guys do have questions, you need to reach out to us. You can find us, anywhere you want to find us. We'll put links all down below. But Miss Crystal, thank you so much for joining us today, and thank you guys for learning or for joining us and learning about loans.